Good afternoon, everyone. Welcome back to another episode of our weekly market review. Today is 15th of July. I was glad to see some of you at our members' night last Friday. And of course, Mr. Gerald Wong with me today was also at the members' night. How was that for you, Gerald?
Hi, yes, it was a very enjoyable dinner. Got to see many people, including our friends at SIAS, as well as our members. So I think that was something that actually ended the week very well.
Yes, on top of ending the week very well, I think stock market also performed very well. We are now into the second week, the start of the earnings seasons in the US as well as in Singapore as well. So some of the usual US banks started reporting with positive results, but market may not be that receptive because of the interest rate situation that may be coming down in September. So I believe Gerald will go through some of this data with us today.
Yes, that's right. As usual, today's sharing is for information purposes only and should not be taken to be financial advice. We have an upcoming Ask SIAS this Wednesday, 17th of July. This is free and exclusive for members only. So if you're a SIAS member, you can scan this QR code and registration closes by tomorrow, Tuesday, 16th of July. Okay, if you find our webinars helpful, do leave us a review on Google. And if you're wondering how you can join SIAS as a member to be able to join the ASIA session, be at the dinner that Sunny mentioned earlier, you can actually just sign up for SIAS using this QR code, and membership for SIAS will cost $12 per year or only $1 per month. Okay, so as Sunny mentioned earlier, we saw that the markets continue to do very well. The S&P 500 closing above the 5,600 levels. And as we can see from this summary, this was led by the tech stocks with the Nasdaq up by 2.4% last week. Okay, the Dow Jones also did fairly well, up 1.6%. And more importantly, for those who are invested in the Singapore stock market, we saw that the STI was actually up by 2.6%, reaching close to the 3,500 levels. Okay, what was the trigger of this bounce in the market? A big part of it is because of the US inflation data. The US Consumer Price Index actually came down compared to the previous month, and that provided investors with more confidence that the Fed will start cutting interest rates soon. Okay, so if we look at this month-on-month decline, it is also the first time that it has registered a fall compared to the previous month in close to 4 years. Okay, so that is a positive sign telling us that inflation might be under control now. Okay, so with rising expectations of the Fed rate cut, we see that the US government bond yields fell further. Okay, if you look at the 10-year US government bond yield, we saw a further decline, and now we're actually close to the 4.1% level compared to close to 5% sometime at the peak. Okay, so that is actually something that is worth noting of, in that the government bond yields are falling, and that is a sign of a positive signal for the stock market. Okay, and if we were to look at the expectations of the Fed rate cuts now, we see that in the upcoming July meeting, investors are still expecting that the rate will be unchanged. But if I look at the September meeting, there's now close to a 90% probability that we'll see a rate cut then. Okay, so remember, if you were at our previous weekly market review, the probability was about 70%. So following the most recent inflation data, investors are now assigning close to a 90% probability that the September rate cut will come true. Okay, and then following that, we might see another rate cut in November. So all of it is driving rising investor expectations that the interest rate have peaked and that we might start to see some rate cuts coming through. Okay, earlier we saw that the STI performed very well in the past week, and we've looked at the top performers of the STI. We saw a number of stocks with very significant gains. So SETS was up 11.5% in the past week, Thai Beverage 10.2%, and we see that the REITs actually had a very significant bounce, with Maple Pan Asia Commercial Trust up by 9%, Frasers Logistics and Commercial Trust 7.5%, and CapitaLand Ascendas REIT up by 6.7%. Okay, so these expectations of the rate cut and the fall in the government bond yields is driving fund flows back into the REITs once again. Okay, if you were to look at the worst performers, there were only two stocks in the STI that were down in the past week. One is Yangzijiang Shipbuilding as well as Jardine Cycle and Carriage. And then we have got some stocks that actually had gains, but then they ended up being the worst performers of the STI, including Sembcorp Industries, SIA, as well as DBS. Okay, I wanted to touch on something which had a lot of investor interest over the past week, and that is the launch of the Ashra 8 PE bonds. Okay, so I wanted to just provide a quick overview, highlight what are some of the key features as well as risk relating to the bonds. Okay, so we have the Ashra 8 PE bonds that come in two classes. Class A1 offering a fixed interest rate of 4.35% per annum, and Class A2 offering a fixed interest rate of 6.35% per annum. Okay, the public offer for Class A1 would be $260 million worth of the Class A1 bonds, and for the Class A2 bonds, there is $50 million on the public offer. Okay, you might be wondering what's the difference between the Class A1 and Class A2 bonds. So I'll go into a bit more detail. So the most important point to note is that the Class A1 bonds are Sing dollar denominated, while the Class A2 bonds are US dollar denominated. Okay, so we earlier shared the interest rate offered by the two different classes of the Ashra bond. Okay, they are expected to be investment grade rated. And I think the other significant difference would be the call date. Okay, so while the bonds have a maturity of 15 years, there is a scheduled call date. And for the Class A1 bonds, it'll be 5 years in July 2029. And for the Class A2 bonds, it'll be 6 years in July 2030. Okay, it is a mandatory call on the scheduled call date if the conditions are met. And if the bonds are not redeemed on the scheduled call date, there is a one-time interest step up of 1% per annum for both the Class A1 and Class A2 bonds. Okay, so those are the key features of the Ashra 8 PE bonds. Okay, for bond offerings, we need to look at who would be the issuer of the bond to understand the ability of them to pay the interest as well as to subsequently repay the principal. So the issuer here is Azealia, which is the parent of the issuer and manager of the Ashra 8 PE bonds. Okay, they were established in 2015 with a mandate to broaden investor access to private equity, and they have close to $9 billion in terms of asset under management. Okay, if you're wondering who is Azealia, they are a wholly owned subsidiary of Severa Holdings Private Limited and indirectly owned by Temasek. Okay, but while they are indirectly owned by Temasek, what we need to take note of is that the bonds are not guaranteed by any party, including Temasek. Okay, you might be wondering what would be the bonds actually inclusive of and how they generate the cash flow. So the Ashra 8 bonds are backed by cash flow from a portfolio of 38 private equity funds. And these private equity funds would have invested in about 1,028 companies across different industries as well as geographies. Okay, so if we were to look at the investee companies of the 38 private equity funds, about 30% of them would be in the IT sector, about 18% in the industrial sector, and about 14% in the healthcare sector. Okay. What is important to note also is that none of the investee companies would actually represent more than 1.3% of the net asset value. There are also various structural safeguards that are in place, and this would include the reserves accounts mechanism, where the issuer will build up cash to repay the principal amounts of the bonds. There is a maximum loan to value or LTV ratio of 40%, and there is also a credit facility that is in place to fund certain expenses and capital costs for fund investments should any cash flow shortfall actually occur. Okay, in terms of the key risks of the bond issuance, I shared earlier that the underlying assets that are held are private equity funds. So that comes with investment risk, including that the amount and timing of the distributions can be uncertain. Next, in terms of leverage risk, these private equity funds may use leverage to increase the exposure, and effectively that will subject the investing company to potential adverse financial or economic conditions. Next, we also have market risk. So any significant deterioration in the economic outlook can affect the private equity asset valuations and the ability of the private equity funds to exit from their investments. Last but not least, in terms of liquidity risk, the trading market for the bonds may be limited after the issuance of the bonds. Another point to note in terms of risk for Class A2 bondholders is that since the bonds are US dollar denominated, bondholders whose investment currency base is not in US dollars would then be subject to exchange rate fluctuations. Okay, in terms of how to apply for the bond, you can do so via DBS, OCBC, and UOB through their ATM mobile banking or internet banking websites. Okay, for Class A1, you can apply in multiples of 1,000 Sing dollar with a minimum subscription of 2,000 Sing dollar. For Class A2 bonds, you can apply in multiples of 1,000 US dollar with a minimum investment of 2,000 US dollars. Okay, in terms of key dates to keep a lookout for, the application will close at 12 noon on the 17th of July, and the trading on the SGX is scheduled to start on the 22nd of July following the closing of the subscription. Okay, next I wanted to talk a bit about Kaap DCV, which is the best performing REIT in the last week. It had a gain of 10% and closing close to the $2 level, given that the bounce in the REITs lifted sentiment for Kaap DCV, but also the company made an announcement around an acquisition. Okay, so this is the acquisition of a 98.5% freehold interest in a data center in Tokyo, Japan. The total purchase consideration is 201 Sing dollar. And effectively, what we see is that the effective interest for their 98.47% stake will be at 198 million Sing dollars. Okay. The occupancy of the data center is 100%, and the weighted average lease expiry is about 7 years. Okay, this is a freehold asset that was built in 2019, and the expected completion date of the acquisition is the 3rd quarter of this year. Okay, some points to note relating to the acquisition. This will mark Kaap DC REIT's first acquisition in Japan. And what we need to know about Japan is that it is the 2nd largest data center hub in Asia. Okay, the assets have seen strong metrics, and effectively what the REIT has guided is that there is potential positive rental reversion. Okay, what the REIT manager has also noted is that this will help to enhance the portfolio metrics as well as increase the resilience of the income, and it will also be potentially accretive to the distributions. Okay, so this is the number that they have shared. Following the completion of the acquisition, the distribution per unit is expected to increase by 1.1% on a pro forma basis. So that is something that might be seen as a positive sign by investors, which is why we saw the bounce in Kaap DCV share price. Okay, in terms of what to look out for ahead, for those investors who are interested in the Australia 8 bond issuance, there's a management presentation live event today, 15th of July. There's an SIAS Academy webinar on retail bond research on the Australia 8 bonds. We have the SIAS that's coming up on 17th of July, this Wednesday. And we also have an upcoming Singapore 6-month T-bill auction on Thursday, the 18th of July. Okay, so quite a number of developments here to keep a lookout for. And with that, I'll hand over to Sunny, who will share with us the latest technical indicators.
Hey, thanks, Gerald. Let me share my screen. Okay, I hope you can see my screen now. So STI this morning is almost flat, down 2.5 points or 0.07%. But in very early trade, we actually touched the 3,500 level and up to a high of 3,509 points. So where the STI is at now, we have already breached the high in February 2022. And so we are at a very close to the, we are aiming to reach the all-time high of the STI. So if I zoom out on my chart on the STI, we are in really exciting times now. So the high that we saw, the next high that we will be targeting for will be somewhere in 2018, and that's around the 3,641 points level. And from here, we are about 150 points away from that level. So we are not sure if we can touch that level, 3,600 level towards the end of the year. But let's look at how the STI has performed in the past week. So as Gerald mentioned, STI performance was largely, or I would say global markets, the optimism in global markets is largely led by the CPI data last week, which shows that inflation is coming down and there is likely going to be a rate cut. And that rate cut is the catalyst of bringing the broader stock market higher. And on the Singapore side, we also observe counters which are rate sensitive, like the Singapore REITs as well as the property counters, also having a lot of gains last week. So one of them is Kaap DC REIT, which Gerald touched on earlier. The other one is Mapletree Pan Asia Commercial Trust, which also saw a big jump in the share price last Friday as well at 5.5%. So these interest rate sensitive counters are starting to make a comeback. So you might want to take note of that. So on the STI, if you can see this dotted line over here, this is where we mark the 1st of July, the second half of the year. So we have a very strong 2 weeks jump start towards the second half of this year. And you can see that the STI is, don't have any sort of a uptrend, upside resistance until the 2018 high of 3,641 points. So we see a bit of a red candle, but it's still very early on Monday trading. Looking at where the STI is, I think the uptrend is still continuing because the MACD is still showing a positive reading, and the gap between the MACD line and the signal line is also pretty significant. Although you can see that this morning, this data is not complete yet. We have to wait for end of the day. At the moment now, the MACD is showing a slight weakening sign or a slight converging sign, but this one data is not something that you should be taking note of. You should take a few of the trading session to look at how the trend is. So do look out for how the MACD closed today. That will give us another signal of whether this rally that we see on the STI will continue to power ahead. On the RSI, we have already breached the 70-point mark, which is the overbought level, current reading at 77, and the 14 days RSI moving average is at 69. So the last time that we touched this level was somewhere in the early part of July last week. So then market have a bit of a 2 days pullback. So I think market now could be facing a bit of a profit-taking kind of situation, and we will be looking closely at the earnings seasons, which the banks will start reporting in the next few weeks. That will be the next catalyst for the STI index. Also, some travel-related names that I can see from SIA, SETS, which Gerald touched on earlier, and some of SIA Engineering and Genting also having quite a bit of gain last week as well. So broadly, most of STI index are having a nice bull run upwards, especially for the rates sensitive counters. Okay, next let's move to the US indices. So the Dow Jones Index, this is the Dow Jones Index. We managed to breach the 40,000 handle as of close of last Friday. We actually touched a high of 40,257 points, and that is a new all-time high for the Dow Jones Index finally, after the S&P 500 had a 34 times of a new all-time high we observed this year. So where is the Dow Jones likely going to hit? You can see that the candle on last Friday had a very high or very long wick at the top. So that means that there is some profit taking at the 40,000 handle, which is a psychological level. So that is understandable. And if let's say we have a convincing breach above the 14,000 level, that could mean that this could become a resistance, which has a double top formation in the earlier part of this year. And that could have a change in polarity where the resistance becomes the support level to propel the Dow Jones Index upwards. Now the MACD still have a positive reading, and we are still observing that the uptrend momentum is still expanding upwards with the growing of the MACD values, which means that the MACD line is diverging away from the signal line upwards. So the Dow Jones Index has the potential to move up higher. The RSI is at the latest reading last Friday is at 71. So that means that we are 1 point above the 70-point overbought level. So it would signal that we may go into a short-term technical retracement towards the 14 days RSI, which is now reading at 59. Okay, so for now, I think it's a little bit toppish on the Dow Jones Index right now, but then the momentum reading according to the MACD indicator and the RSI is still showing that the index is likely to inch up just slightly a bit higher until we go into the high that we saw in the December period last year, where RSI hit a high of about 80 points, and that could means that the heavy resistance may come in from there. Okay, so next let's move to the broad index S&P 500. Okay, so the S&P 500 actually touched the 5,600 points last week. And then we closed around 5,615 points, which is a figure that also considered an all-time high. What I would take note on Friday was that actually on Friday, we actually touched a high of 5,655 points before closing about 40 points lower at 5,615 points. So again, another sign of profit taking on the S&P 500 index. We are also testing the upper bound of the Bollinger Band, so not a surprise that there is some traders who are selling off because we hit the upper bound of the Bollinger Band. On the MACD indicator, we can see that at least the last two trading sessions on Thursday and Friday, we saw a subsiding of the momentum according to the MACD indicator because the positive values is coming down, which means the MACD line is converging towards a signal line, and it could, if a crossover happens, it could signal a change in direction of the S&P 500. The RSI indicator is already above the 70-point mark, which is the overbought mark. Hence, it is also primed for a short-term reversal on the S&P 500 index, at least until we reach the 50-point neutral mark on the RSI, which you observe during the first half of this year. That is where usually the 50-point neutral mark is where the RSI will start to bounce. Unless we have a deeper correction, that would mean that we will go and test the lower bound of the RSI, which is the 30-point or oversold level. But for now, I think the indicators are telling us that market is a bit toppish, so do exercise some cautious when trading into the US market for now. Okay, and next let's move to the tech-heavy Nasdaq Composite Index, which had a very big fall on last Thursday. okay, down 1.95%. But then on Friday, we saw a jump of 0.63% again, up on the tech-heavy composite index. So there was also a big sell-off on NVIDIA stock on Thursday, where the stocks dropped more than 5%. But then I do see investors coming back into NVIDIA stocks with a positive 1.4, 1.6% gain on Friday again. So investors can't really resist their favorite tech stock coming down that much. So that could be an opportunity on Thursday for NVIDIA investors to get back or load up more on NVIDIA stocks. But looking at the Nasdaq Composite Index, same thing, we touched the upper bound of the Bollinger Band. There's a bit of a sell-off. And then now we are in the sort of the upper bound range of the Bollinger Band. So that is where we will not have as much pressure compared to the S&P 500, where the readings are above the upper bound of the Bollinger Band. So as long as it stay within the Bollinger Band, we are 2 standard deviation away from the 20 days moving average. We still have some room to push up further, at least for the Nasdaq Composite Index. But on the MACD indicator, you can see a very prominent convergence of the MACD towards the signal line. So that means that momentum is subsiding. And the RSI has come down back from a high on Wednesday of 80 points, now at the reading of 66. So we have a sort of a pullback, but we are looking at it going back to the 50-point neutral mark. Before that would be a more conservative level of getting back to the Nasdaq Composite Index. Okay, so that is my updates on some of the index movement this week. Anything else to add, Gerald?
Nope. I think we have seen quite a bit of a bounce in the markets in the first 2 weeks of July already. We are going to the results season, so that will probably provide us with an indication as to whether the stocks can live up to the expectations that are now more elevated.
Yes, so we will keep you guys updated on how the market develop as we go along on this weekly market review show. And we'd like to thank everyone for taking their time to watch our weekly market review today. And we'll see you again on next Monday, same time, same place. Goodbye.